The American Cotton Shippers Association, also known as ACSA, is a trade association primarily made up of cotton merchants, founded in 1924. ACSA members manage the majority of the world's cotton trade, providing services of merchandising, delivery logistics, and risk management to their customers. ACSA will be holding its 101st annual convention in Palm Beach, Florida in June of 2025. For more information on ACSA, including their convention, view their website or Twitter account at Cotton Shippers.
Well, all right. Howdy, everyone, and welcome back to the Cotton Companion podcast. I want to thank you for tuning in. Now, regular listeners will have gathered by now that this is not Jim Stedman, but rather Beck Barnes, who is leading today's podcast, substituting for the great Jim Stedman in his absence today. He will be back soon. I got big shoes to fill, but I'm going to do my best here. It is the second week of April. We here in the Mid-South are drying out from an early spring Old Testament amount of rain here in Arkansas, Tennessee, Mississippi, and elsewhere. And I suspect as the sun starts to peek out and warm things up, as it's doing today, that many of y'all are going to start to get that itchy trigger finger to get those planters fired up. And so all eyes are on the all-important soil temperatures for the next several weeks. And I hope y'all have got some optimism for this year. We certainly do. Now, in case you have been living under a rock for the past couple of weeks, you may be unaware that some new geopolitical trade disruptions, let's call them, have popped up through a fresh round of trade tariffs levied at virtually all of cotton's export destinations. The Trump administration has reset the playing field when it comes to global trade here in the past couple of weeks. There's a lot of noise out there about what it means. What should we make of all of it? What does it mean for commodity pricing in the near term? Well, we're in luck because we got a seasoned cotton market veteran, Dr. O.A. Cleveland, who is joining us on today's podcast to help us sort through that fog of trade war. But first, we want to share a brief message from our gracious sponsor, Delta Pine Cottonseed.
If you're going to succeed, you need cotton that's strong enough to perform around here where you grow. That's why Delta Pine cotton varieties are bred to meet the needs of your neck of the woods and are rigorously evaluated by local growers for maximum performance potential and consistency year after year. Strong cotton performance starts round here with locally tested Delta Pine cotton. Learn more at deltapine.com. Read and follow pesticide label directions, grain marketing, and other stewardship practices.
Okay, thank you to the good folks over at Delta Pine for that message and for their support of the Cotton Companion podcast. Now, I mentioned briefly at the start of this episode that I suspect many of you might be getting that itchy trigger finger to fire the planters up this week and next. But according to the USDA Prospective Plantings Report, well, there's not as many of us as it used to be out there in terms of cotton farmers. In late March, USDA's National Agricultural Statistics Service, easy for me to say, issued their report showing intended cotton plantage area would be 9.87 million acres for 2025. That's down 12% from 2024. If realized, that number would represent the lowest total of planted cotton acreage in the U.S. since 2015. Now, upland cotton acres are projected to be 9.71 million acres. That's down 12% from the previous season, while American Pima is down to only 157,000 acres nationally. That's down a full 24% from the previous year. Of the Cotton Belt's 17 cotton-producing states, only Kansas and Arizona reported an intention to increase cotton acres in the coming year, and those increases are marginal. Now, interestingly, for context, among other crops, USDA is reporting a 5% increase in planted acreage for corn, a 4% decrease in soybean acreage, a 4% increase in sorghum, and an 8% increase for peanuts. Now, for further context, the U.S. planted a remarkable 91.5 million acres of corn in 2024. Obviously, not all of those acres are in the Cotton Belt. But that 5% increase in corn acreage would result in a full 4.7 million some odd million acres. Now, again, you got an Ole Miss boy running math here. You're doing 5% of 91.5 million. So bear with me, but I'm pretty sure that's accurate. So that's a lot, 5 million acres that corn has found. And you have to imagine many of those were zero sum with cotton acreage through some of the belt, certainly mid South, Southwest, certainly anywhere really. I mean, corn's out there. So similarly, a 4% increase in sorghum would mean 225,000 new sorghum acres in 2025. Most of those will be coming out of the cotton belt, zero sum with cotton. And now some more wobbly math out of my brain, which is dangerous. That increase in peanut acreage comes to about 150,000 new acres of peanuts, majority of which obviously are going to be down there in the southeast. And we have to imagine that those are zero sum acres coming out of cotton down there, Georgia, South Carolina area. So that USDA prospective planting survey is conducted in the first 2 weeks of March. So that should give you some idea of how things were penciling out for our farmers in that early window. Well, all right. Now we've just digested those USDA Planting Intentions survey results. And so now what I'd like to do is spend some time talking to a man who can make some sense out of them. So joining us today is our old friend and my favorite Mississippi State Bulldog, Dr. O.A. Cleveland. He is a professor emeritus of ag economics at Mississippi State University. Now, O.A., thank you so much for joining us today.
Well, it's always my pleasure. I appreciate it, and I actually enjoy it. Thank you.
Yeah. Well, we certainly do too. We appreciate you. So, especially in a week like this, there's a lot going on, a lot in the headlines. So, I'm happy that you're joining us today. So, as I've said, we have just run through the USDA Prospective Plantings Report, which came out at the end of March, and that pegged cotton acreage at 9.87 million acres this upcoming season. OA, generally, can you tell us what is driving that reduction in acreage this season, and is there anything that can happen here in the next month prior to the bulk of the planting being done that's going to move that needle one way or the other?
Well, certainly, acreage plantings have been pushed lower because of prices, and initially lower because of the comparative price with competing products that essentially being cotton and soybeans. But stepping a small step back, this data was collected the last 10 days, last 7 days in February. And at that point in time, cotton's disadvantage was even greater than it is now. So I would say that when push comes to shove, we'll see slightly higher cotton acreage, but not enough to get particularly excited about it. We saw the southeast acreage dropping about 14%, and that's down some 300,000 acres, or a little bit. Well, yeah, right at 340,000 acres. Pretty big drop. But again, throughout the southeast, that peanut rotation is extremely important. So that helps keep acreage somewhat higher. I would admit to that acreage being slightly lower than I anticipated. The Mid South took the biggest hit, a record hit, 20% reduction, down again a little over 300,000 acres. And that's all of this is just based simply on the price for corn, soybeans versus that of cotton. But moving on down to the Southwest, and that's the biggie. We've got 55. Some people just round it off and say 60% of our cotton planted in the Southwest, and we pay more attention to that nowadays. And of course, we have the drought situation there is reported to be worse than it was at this same time last year, which brought that acreage down some 700,000 acres in round numbers, or compared to last year's actual plantings. That's only an 8% drop compared to the 20% and 14% in the Mid South and Southeast, respectively. But that's also where the production is. And the biggest problem there, I'll go through the rest of this before I get to there. The West, only 150,000 acres, so not a whole lot reason to dwell on that. But as you say, 9.9 million acres in the planting intentions report versus 11.2 million last year. So 1.3 million acre drop from plantings. And that is significant. But moving back up to Texas, uh, I would not be yet surprised to see actual plantings higher than that number because we're so focused on planting and it's necessary to plant with the insurance program in mind. And we plant whether we think we're going to make a crop or not and play off of the abandonment issue, which was very high last year. And backing up to what I referenced earlier, the subsoil moisture in Texas, the big crops in Texas. Billy Donovan taught us this many years ago, and I would say, where is he today when we need him? But the late Mr. Donovan told us then that you won't have a crop in West Texas if you don't have good subsoil moisture. And our subsoil moisture this year is just as delinquent as it was last year. So this year's Texas crop is depending on whatever moisture we can get at pre-plant and planting, and of course that occasional moisture out there after the crop is planted. Of course, the rainy season ends at basically was we say Memorial Day, so we can't expect much moisture out there after the 1st of June. So we've got to think in terms of significant abandonment, just as we saw last year. And based on the insurance programs that growers out there are signing up for, they themselves are betting very heavily on the abandonment program. So it's all price driven. And what's driving the price is the lack of demand, period. Nothing else, nothing more, nothing less. So we're looking at a crop this coming season. We usually throw out a number and put 1,000,000 or 2 bales on either side of it. That's a little bit wider this year. I'm throwing out a crop of 12 million bales. Not a lot of cotton compared to the 14.1 million bales we had this year. But again, the drought is driving all of these issues, and the growers' suggestion now that because of price, they're not going to put the inputs on this crop. So that takes yields lower. A 12.0 million bale crop, the drought continues. We don't get the Memorial Day rains, then we're looking at a 10 million bale crop in the U.S. Everything's perfect from here on out. We get a 15 million bale crop, only 1 million above the current year crop. So the market is poised very much to see higher prices. Couple that with some reduced foreign plantings of a tighter world supply demand scenario. So higher prices are on the outlook.
Yeah, boy, I'll be between me and you, I'm rooting for that perfect scenario. I feel like our guys have already reduced enough acreage out of the crop. I want what they do plant to come up and yield big for our men. And I know you feel the same way, Away, for our guys out there in the Southwest. But I'll tell you, as we visit today, to just keep our conversation moving along here, it's April 9th, and I just got done reading this morning a column penned by the prestigious Dr. O.A. Cleveland on cottongrower.com. And the column basically said, with respect to the round of tariffs that have been dominating the news cycle here recently, your column said basically, relax. And that seemed to be your message to kind of the tariff hysteria that swept the country over the past week in a lot of circles. Now, why are you so zen on cotton prices uh, withstanding or sustaining rather the tariff situation?
Thank you. Well, I do feel very sincere about that forecast, as I guess I do most of them. But uh, cotton prices at 60 cents a pound, 63 cents a pound futures. They're really at 63 cents. This is where we were 6 weeks ago, 7 weeks ago, with the exact day I don't recall, but we fell down there. And we've been talking actually since late December that we had to face a 63-cent market. A lot of folks didn't want to see that. But I think it's been written on the wall just with the demand factor, the fundamentals we were seeing. And now that we see it, now that the U.S. acreage has dropped significantly, now that world acreage is dropping significantly, the world supply demand structure is such that we will run short. We never run out, never going to run close to being out, but we're not, but we're taking supply down low enough, stocks low enough that we'll have to push prices back to a minimum of 72 cents. Now, that's not very high. That's just 6 cents, 5 cents above where we are today, basis to December. That's a minimum. And that's if we get everything we want out of this market. And we do get 15 million bales. We do get great weather for the Mid-South, the Southwest, and the Southeast as well. The odds of that are not very high. So I would tend to think, so as I say, relax, hold your breath. The odds, the probabilities would suggest that we've got December somewhere between 75 and 80 cents. And just depending on if we have difficulties in Xinjiang out in the far northwest China, or if we have problems again in India or Pakistan, then we could get into the very, very low 80s. And of course, as a very low 80s today, we would all do backflips. We'll be excited about that. But I have to be extremely excited about seeing December rise up to 75 cents. And that's 8, 9 cents above where December is today. So that's a good jump. We're still going to have, unfortunately, severe demand issues for U.S. cotton. That's just something we're not tackling right now in a very good way. And until we do, we're going to have that trouble. The market trade, the world trade has changed with respect to cotton. The market structure now is looking to the Southern Hemisphere Brazilian crop more than ever before. It's a much larger crop than it ever has been. It's basically the same varieties, and the world merchants are willing to sell that crop at a lower price than the world merchants are willing to sell the U.S. crop for. And while I support all U.S. merchants and co-ops here in the United States, the major world merchants who operate in the United States also operate in Brazil. They're doing what maximizes their income, their risk, their reward from their risk, and they're pushing the South American crop harder than they're pushing the U.S. crop. And the U.S. is just going to have to face that, and they're going to have to force that fact that our crop gets pushed a little harder. But I can still find a great deal of excitement to see prices at a minimum of 75 cents. That's not going to excite many people, but it's still in round numbers a dime more than we're higher than we are now.
Yeah, that's good. And that is comforting to hear you say, listen, there's a lot of chatter, there's a lot of noise happening in the market right now, but the fundamentals are the fundamentals. And the fundamentals say we do have some price bumps on the horizon. Now, since you have written that column on April 7, today is April 9. I think, is that right? You wrote it on Friday and today's Tuesday. Don't make me think too hard on it. 'Cause since that happened, there's been some saber rattling and some tariff raising and posturing between the Chinese and the Trump administration yesterday and even just this morning on April 9th. So, just briefly, does that shake your belief uh, that the fundamentals will play out in a bullish fashion eventually here?
No, it does not shake my belief. My belief is there. Have I've tried to pay attention to this, and I was not surprised either way. And the tariff rates that I see now, I would write the same article today if I could think of those words. Looking at the numbers that did come out yesterday, they still would project, however, that the Chinese demand for U.S. cotton will be down about 13%. Well, a couple things going on there. The Chinese textile industry is, in fact, shrinking. I don't know if we want to say finally, but the textile industry is sinking. They were 42, 45 million bale user. Now they're 38, 39 million bale users. So their demand is much less. They do tend to buy a lot of yarn compared to past years from Vietnam. They buy a lot of yarn from Bangladesh, buy some from India, and Pakistan, major buyer from Pakistan. So while they may still be in the apparel, in the fabric business, making weaving and sewing, and their cotton purchases are not as great as they were. So we're not going to be hurt by losing China, by losing that 13%. And I would actually suggest it's a little bit less than that, because not only is there a total demand for raw cotton shrinking, but we're also seeing, and have seen, it's not new. We've seen for the last 3 years, they're increasing their demand for Brazilian cotton over U.S. cotton. So a decline in U.S. use in China was coming anyway, period. Maybe it's going to be a little bit heightened this year compared to what it would have been, but maybe not. I wouldn't debate it's not going to be any less, but it will be less. But it's the fact that China, the cotton that China has been buying, given that world supply is tight, that cotton that the U.S. has been selling will go to some other market that possibly Brazil abandoned because they could sell more into China. It's possibly a market that India had to abandon because they're increasing their textile activity, actually. So that's offsetting. And India will still be a good buyer of U.S. cotton. Yes, the tariffs have some people rattled, but all of these cotton textiles with the countries, with the exception of China, literally all have in writing expressed the fact that, we need to negotiate with the United States on these tariffs, and they are saying that they're willing to. So I don't see that of being much of an effect on the cotton price, i.e. the acreage that we're going to plant here in the United States in 2026. I like the price. I like the fact that we're going higher.
Very good. Yeah, I just make note that my shirt that I'm wearing today was made in Vietnam. So I did that intentionally. So you mentioned, you kind of gave a scan of the global situation there. In your column, away, you mentioned that world cotton seedings are going to be below expectations with this crop, this 2025 crop. So we are not the only ones reducing acreage. Can you just tell us generally what that looks like and what that means for pricing?
Well, yes, that's the same factors that are driving a lower U.S. acreage are driving acreage in major cotton producing countries. Actually, India, who was down 8% last year in favor of other crops, would be down another 5% this year. So that's going to put India in a situation, unless they have literally a record crop, that'll put them in a situation of needing more U.S. cotton themselves next year. Australia will probably have a not record crop, but an outstanding crop. They've had tremendous moisture. They actually, though, they've been on a verge to some degree of having too much moisture now. But as we look to the African crops, again, we're seeing some weather situations there. It's too early for me to say what the problems will be in China, but the Chinese initially have indicated that they're going to plant more pulses, more protein based seeds as opposed to cotton. So most of all clusters have indicated a decline in cotton acreage. And that just, again, as we mentioned, the supply demand, it just brings down world supply to a level that once that's registered, once we get through the tariff talk in another month or 2 months, cotton prices will be able to trend higher. I thought July would be higher, and it may be, yeah, but I may have missed that. It may go off the board at 66, 67 cents.
Very good, Owe. The more I'm hearing you talk, and I've gleaned as much reading your column from this past Friday, but generally, moderately, you are cautiously bullish on the coming year.
My caution is not great. I hate to say I'm very bullish. I'm very bullish 75 cents.
Yeah. So that's okay. So so you're jumping the gun here. Just let me say, for our guys, for our listeners who are looking to get the best price on this challenged 2025 crop, you are well aware of all the challenges they're facing. What general advice could you give them? I know you're not a soothsayer, but generally, what advice would you give to a grower today?
Well, generally, the first thing today is we hold tight. We do not forward price. We do not edge. We do not, at this price, we do not puts. We sit naked as we are, as we have been in the market. As we look at once we get to the May 30th, June 1st time period, we observe what the weather patterns are, what they have been, and we begin to look for price. If we get a significant spike, if we don't get the rains in West Texas and we get a significant spike up to 75 cents, I would at that level step out and want to price as much as 10 to 15% of my crop there at 75 cent December futures. And then if that weather scenario does in fact hold, as we move to the growing season, we will see prices move higher. I would probably wait until the August time period and look for something again that probably will be in the 75 to 78 cent level and do a fair amount of pricing. I wouldn't want to say all of it, but I would probably want to get into as much as 50 to 60% of my crop sold at that level. And then we'll just have to wait and see what the weather patterns and demand holds for us after that. I think there will be ample opportunity to do pricing in the 75-cent area.
Very good. Oh, we always appreciate your willingness to step out there and prognosticate in the way that you do. So I got my last question for you. So I saved my hard-hitting questions for the end. Are we bullish or are we bearish on the 2021 NCAA national champion Mississippi State baseball team this season?
Yeah, I am extremely bullish on that. But now
Okay, good.
I do want to come back before we finish. I do want to come back and indicate you'd asked me earlier in our discussion who the young man was that's a legend on Wall Street.
Oh yeah, no, I forgive me. I will reset that for you now. In your column, you mentioned a gentleman that I'm not familiar with, Paul Tudor Jones, who predicted this recent round of kind of market hysteria on the news of this tariff outbreak. So, can you tell our audience who is Paul Tudor Jones and what was he correct about?
Okay, Paul Tudor Jones, and that's why I wrote that. I wrote it because he was dead on it. But I sat in a meeting in, I think it was around the 1st of October, 1987 in New York at the Cotton Exchange. And Paul Tudor walks in and says, "Gentlemen, I want you to know that our exchange is 100% liquid. I have liquidated every asset I could on our behalf because this market, talking of the stock market, this market is going to crash." Within 2 weeks, the New York Stock Exchange, the Dow, suffered its worst loss in history. It was down 20%, 22%. And Paul Tudor, a Memphis lad, grew up in Memphis. He happened to have an uncle in the cotton business. His uncle's last name was Donovan. His uncle had allowed him to come to the cotton floor and begin trading cotton futures. And he did a marvelous job, made considerable wealth, and then stepped into the stock market, though he maintained his ties to the cotton market and to the cotton ranks. After he made this prediction, he established a trading house of his own there in New York, and is now a legend on Wall Street. He would come back from time to time and trade cotton just for fun, and he made it the day he was the first floor trader to ever pay $1 a pound for cotton. He wanted that on his record. He did it. Now, in November, he came out in an interview with Bloomberg. And again, I was able to be in attendance for that. And I heard that too. He said, this market is going to crash. He said, I'm getting very liquid. I'm buying more gold. He said, I'm actually buying more Bitcoin. He said, this is going to be one of the biggest crashes we've had. Now, very few people accepted that. Here he is this Southern boy, turned New Yorker, and people do listen to him. But he is a legend. He cut his teeth in the cotton ring. So Paul Tudor Jones, I believe he's certainly a Memphis graduate, but I believe he matriculated in college at the University of Virginia. I'm not sure of that. So you can look up Paul Tudor.
Very good. Yeah, and you can read about him in OA's most recent column that's at cottongrower.com on our front page right now, actually, if you wanted to,
Okay.
if you so chose.
If I may regress and go back to being bullish on, extremely bullish on the NCAA baseball situation,
Yes.
we have done what we did this week or in the process of doing. We have selected 8 extremely fresh heifers, and we put a bull on the baseball field. So I'm bullish about the baseball field for the rest.
That's good. Look, I wouldn't put it past Mississippi State to turn it around. I would not, and Lord knows it's been a minute since my Rebels have won a game against Mississippi State, won a series against Mississippi State, I should say. So,
Well, they're this year, but thank.
well, I tell you what, I appreciate all of your sports and market prognostications, OA. And for those of y'all who wish to learn or hear more from Dr. Cleveland here, he provides a regular Friday column that analyzes weekly cotton market conditions, and you can find them on our website at cottongrower.com. OA, we thank you so much for all the work that you put in on behalf of our cotton farmers. We know that cotton farmers have no greater friend than Dr. O.A. Cleveland. So don't be a stranger, sir.
Thank you so much. You honor me. Appreciate it.
Thank you. All right. Well, that's going to do it for this episode of the Cotton Companion podcast. I want to say thanks again to our good friend, Dr. O.A. Cleveland, and thanks too to our sponsors, the American Cotton Shippers Association and to Delta Pine for their support of the American cotton industry and this podcast. And as always, we want to thank you, dear listeners, for joining us and for your continuing support. As always, we hope that you've enjoyed this episode, and if you did like what you've heard, please be sure to spread the word. Tell your farming friends and neighbors about the Cotton Companion podcast. Here's where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion, or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter. And on Facebook, you'll find us by searching for Cotton Grower Magazine.
The Cotton Companion podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues at the world headquarters for Meister Media Worldwide in lovely Willoughby, Ohio. I'm Beck Barnes, filling in for the great Jim Stedman, and we will be back with you in 2 weeks for the next episode of The Cotton Companion.
'Cause God made me a farmer. Yeah, he works and he works and he works and he works all day. God made a farmer.